Hello dear traders, I'm Anna Kasatkin and you're watching weekly review of financial markets on Insta TV. Last week, stock indices around the world suffered big losses. The US stock exchange was no exception. According to experts, the main destabilizing factor was the continuing fall in oil prices. Extremely negative sentiments in the US stock market were mainly observed during the week. The Nasdaq index lost more than 3% over the week, ending at the level of 4,488 points. The Dow Jones Industrial Average slumped by more than 2% to finish at 15,988.08 points. Although components ended in negative territory. The S&P 500 index slid by more than 2% over the week to close with the value of 1,876.99. All its 10 sectors ended in the red. Sell-offs began in China, where sentiments about the future prospects of the economy, the yuan's depreciation and stability of the financial system as a whole remained depressive. The Shanghai Composite Index lost 3.5% on Friday. The Chinese stock market formally entered the phase of a bear market. The Shanghai Composite has dipped by 20% since December 22nd. A sharply negative dynamic was seen in Europe as well. Its benchmark indices suffered losses in the range of 2–3%. Investors panicked. In addition to the collapse of oil prices, the markets are pressured by the strengthening of the US dollar, the US Federal Reserve's plans to continue raising rates this year, and the US industrial sector's weakness. In addition to this, there are concerns about a hard landing of China's economy, which may result in a recession for the whole world economy. Shares of the US computer maker Intel Corporation plunged by 8.9% on Friday on the heels of Thursday's earnings report. It made the company the biggest loser among Dow components. Price began falling despite the fact that the financial report for the fourth quarter turned out to be better than expected. The company said its fourth quarter revenue totaled to $14.9 billion, net profit $3.6 billion, and profit per share 74 cents. Brian Grzanich, the chief executive officer, said the results for the final quarter can be characterized as a good ending and are in line with the company's expectations. At the same time, shares in General Electric fell by 2% during Friday's trades. The American multinational corporation said that it has made a deal to sell its appliance unit to Shanghai-listed Qingdao Haier Company, in which Chinese appliance maker Haier Group owns a key stake, for $5.4 billion. And this was the weekly review of financial markets prepared for you by Insta TV team. See you next week. Bye.